Welcome to Surviving the Credit Crisis, a show designed to give you the tools you need to survive any credit crisis. Here's your host, Karen Simpson-Hankins.
We live in a greedy little world that teaches every little boy and girl.
Welcome to Surviving the Credit Crisis, where it's my mission to help consumers survive, strive, and thrive with the tools they need in home ownership that provide them with a more empowered financial life. If you want to learn more about me and any of my homebuyer education products, you can check out my website at www.KarenSimpsonHankins.com. I also invite you to join me on Facebook at facebook.com. Need mortgage info now, where I'm fighting the industry for you. You know, it's an interesting market to say the least out there, and real estate prices, at least in the Central Oregon area, are continuing to climb. And I get asked all the time, are we in another real estate bubble? And so my guest today, I think, is the perfect person that can answer that question for us. Her name is Christine Browning. She's the owner and principal broker here in Bend of Home Smart Central Realty. Good morning, Christine.
Hi, Karen. How are you today?
Oh, I'm fine, thanks. It's another beautiful day in Central Oregon.
Can't beat it.
I know. It's the best place to live. I can't imagine any place else.
Me neither.
So I get asked all the time by potential pre-qualified customers and that kind of thing if I think that we're in a real estate bubble or price is going to continue to rise. And I thought you would be the perfect person to kind of give us some insight on that. So what's your opinion?
Well, thank you for asking, Karen. Yes, I'm getting this question all the time as well because obviously we saw prices come down so much in 2010 and 11, and then the prices started turning around, and now in a lot of cases we are back at or close to where we were at the top of the market back in 2006. So I think it's surprised everybody how fast real estate has rebounded. I don't think that we are in a real estate bubble I don't think we're in the same situation that we were in back in 2004, 5, and 6, mostly because it's very difficult for folks to get home loans currently, where before just about anybody with a pulse could get a loan.
Yeah, that's true.
Everybody who gets a home loan is put through a tremendous process of verifying income and assets and what have you. Obviously, that's your area of expertise. But what I'm finding is the risky financing is definitely not being done.
Mm-hmm.
Therefore, the folks who are actually purchasing homes can afford the home that they are being put into, and are, in a lot of cases, putting a much larger down payment. And the chances of so many people walking away from their home are much lower because people are in a home that they can actually afford, where that was not the case back, several years ago.
Right, I agree with that. Mm-hmm.
One of the, what I believe, one of the reasons that prices have rebounded so much, we've had a lot of people re-enter the market. We've also had really outstanding low interest rates. What I find in the real estate world is people are buying a house payment. So if they are renting for, $1,500 a month, they are going to be looking at obtaining a loan that's going to keep their payment affordable, usually somewhere in that $1,500 to $1,700 a month range. And so if interest rates are really low, that may mean that a person can afford up to $300,000 or $350,000. I believe if we see interest rates go up to say 5%, 6%, 7%, which wouldn't really be, we're not even talking really high mortgage rates at that
right.
point.
Mm-hmm.
People are going to be able to afford less home to keep their housing payment reasonable. So this may actually depress prices of homes. So what I tell people is, I don't think we're in a real estate bubble. However, if interest rates hike up, we may see the prices of homes either level off or even come down a little bit because people can only buy what they can afford. So the best time, in my opinion, to buy is if somebody can find a home that they can afford, and they may pay a little bit more for the home now, but get to lock in a 30-year, 4.25% interest rate. If they waited a year or two, they might be buying a little bit of a lower priced home, but end up with a higher interest rate. One way or another, over the life of the loan, they're going to be paying more for the home at a higher interest rate.
Well, right, and that was going to be my next question to you: is now a good time to buy, or should they wait to see prices come down? Because that's another question I get asked all the time, and I don't know. As interest rates go up, I think that yes, that will have an impact on the market because people will be able to buy less house than they have been able to at these low, unbelievable, crazy interest rates. But there's such a demand for our area. It's hard for me to see the fact that prices are going to come down.
Yes, and I agree with you. If anything, I think that we will see prices level off. I don't think we're going to be seeing 20% appreciation in a 12-month period like we have been over the last few years.
Mm-hmm.
However, I do think we're going to see things level off. There's a lot of new construction hitting the Central Oregon area. They are expanding the urban growth boundaries. So I believe that there is going to be a steady supply of affordable housing, affordable at this point being somewhere, $300,000 and less in Bend, and probably, $200,000 and less in Redmond. And with new construction hitting the market, I think we will have a steady supply, and we'll also have a steady demand. As I'm sure you've heard, they are going to be expanding the four-year university and building a campus. So we're going to have a lot more college students living here, and we're seeing, economically we're doing well in Central Oregon. So we're seeing lots of jobs added. Just on the west side of Bend, they're building 3 new schools, which obviously is just that alone is going to employ lots of teachers and principal and maintenance. And when you think about all the jobs being created, I do think we will continue to see a steady demand for housing. However, there is inventory hitting the market with new construction. So hopefully things level off. So if a buyer says a price is going to come down, my opinion would be not likely unless, some huge economic crash happens. Most people are going to hold on to their homes. Most people are not going to want to sell their home for a loss. And most people that are in a home now can afford it. So they're not going to turn around and choose to walk away from a home or sell because they can afford it.
Well, so I think it's just a completely different environment.
Yes, completely.
Yes, I agree with that.
Different. So if folks say, should I wait, usually what I try to explain to them is if you wait and interest rates go up to 6%, you're going to be able to afford less house. There's no guarantees that prices are going to come down. If anything, I think they'll probably stay fairly constant, steady.
Well, and I think that interest rates only have one way to go, and that's eventually up. It's just a matter of when.
Absolutely. And we're seeing a slow, last year we were seeing rates below 4%, and now, I'm seeing quite a bit in the 4.25% and 4.5%. So we are seeing that slow, gradual increase in interest rates. I wouldn't be surprised if this time next year we're in the high 4s and low 5s.
Well, changing the subject a little bit, but I've been seeing a lot of comments on the internet and a variety of different places about our rental market, and that, affordable rents are hard to find and that there's just not a lot of rentals available out there. So if you've got a client who's thinking about buying a rental home or renting their current home and buying another, what should they think about when investing in rental property?
Boy, it's a great question, and I spend a lot of time thinking about this as well. But my first response to any client who asks this is they really need to have a conversation with their mortgage broker and potentially their financial planner. If they've lived in the home as a primary residence for at least 2 out of 5 years, they're able to sell it and get tax-free gains. So a lot of folks that bought in 2009, 10, and 11, they've got $100,000 to $200,000 of equity now in their home.
Mm-hmm.
I think if they met with their mortgage broker and financial planner, most often it's going to be suggested to them that they go ahead and pull the profit off the table and not have to pay taxes on it. And so that's one thing that a lot of folks need to keep in mind. Now, say they've lived in it for 2 years and they say, well, I'll make it a rental for the next 2 to 3 years and then I'll sell. That's a possibility as well, and it just depends on what they can get for rent. We are in a shortage of rentals in all of Central Oregon, and I think it's because there isn't really great financing available for investors at this time.
Mm-hmm.
In the past, investors could come in, maybe just put 10% down in a house and get a mortgage, where now it's really hard to get a loan if you're an investor and you want to pick up rentals. And also the prices have gone up so much in houses. If an investor comes in and tries to buy a home for $300,000, they're not going to be able to rent it for what they need to break even.
Or positive cash flow, right?
I mean, my suggestion if somebody wants to rent out their home and is that they really need to have that conversation with their mortgage broker and their financial planner and maybe even their CPA to come up with a determination of what their best overall strategy should be. And owning rentals isn't necessarily. I mean, I recommend that my clients hire a professional rental company to manage their property. If you have a home, it's a huge investment. A lot of folks think, I'll just run an ad in Craigslist and I will manage the rental myself. And they're absolutely blown away with the amount of damage that a tenant can do inside and outside of a property. Mm-hmm. And so if they've decided to have a rental for a couple of years and it comes time to sell, they can be. I mean, I see it all the time where my homeowners are just blown away with the $30,000 of repairs they have to make to a property just to get it back to where it was at when they lived in it.
Right. So, well, I have seen or had calls here recently by individuals that are looking to buy rentals, and I hadn't had any calls for that kind of product for quite some period of time, but I can tell individuals who are listening that, it's going to take a substantial down payment. I was looking at a fourplex pricing just a few days ago, and it's 25% down. And so it's going to be a substantial investment. And if a person doesn't have financial or investment property experience for a couple of years, then the lender requires them to have a 25% vacancy factor, which makes it more difficult to qualify when our prices are up.
So I guess it's definitely, there's a lot. I think in the past, and I know I myself many years ago had 6 rentals. It was really easy to buy rental properties. It was easy to get the financing with just 10% down. I don't know. It seemed like it was a simpler process. There's definitely a lot more to it now in this current market, and that's where anybody considering it really needs to take the time to seek out advice from their financial advisors, and I highly recommend that they hire a really good property management company to manage their home to protect their investment.
Well, I'm thinking too, with the addition of the qualified mortgage ruling that came out in January, lenders have kind of a little bit different attitude too. Everything is full documentation, and with investment properties as well, I mean, that can have a significant impact on the affordability and all that aspect of it.
Absolutely. So, while we absolutely need more rental properties available in Central Oregon, I don't think that anybody and everybody should be considering becoming a landlord.
Right.
And it might make a lot of sense for some folks, but definitely by all means, when anybody calls me, I say seek out professional opinions from financial advisors and your CPA and your mortgage broker to really understand what is involved.
Right. No, I agree completely. Listen, I need to take a little break here for a minute and do a commercial for my sponsor, and then we'll get back at it.
Sounds great.
Real estate is an increasingly complex, highly competitive, and fast-paced industry, and tomorrow's professionals require advanced knowledge and training to excel in this field. Graduate studies in real estate are in demand more than ever because an MBA in real estate can open doors to greater job and career opportunities. Developed especially for working real estate professionals, Longwood University's new online MBA in real estate will take you to the next level. Check out their link on my show page. So, we kind of got into the whole qualifying aspect of the difference in the market today because everybody has to qualify, which means that the people that are being put into mortgages are people who can afford the home that they're in, which kind of brings me to my next question because as a mortgage person, I have my own opinion of how much monthly income a person should spend on a mortgage payment, but I kind of wanted to get your take on it as a realtor.
Well, again, I would highly suggest that folks take a look at their overall financial income and expenses, and really they should look at what their income is, their take-home pay, and then they need to figure out, what they're spending on gas and what they're spending on potential, child care costs and food and, maintenance and all the different things that go into our monthly financial picture, and then determine how much they can reasonably afford for a house payment. My opinion is your overall monthly outflow of fixed bills, being car loans and gas and utilities and those things, you really should shoot for 50% of your take-home pay, no more than 50% to go to everything. So if you're making, if you're bringing home $10,000 a month, no more than $5,000 a month should go out, including your mortgage payment and then all your other fixed expenses, if that makes sense.
Mm-hmm.
So for some folks that don't have children, they're going to be able to have a higher monthly payment than for folks that, like myself, that I have two kids, and
right.
There's a lot of expenses with kids. And while I might be able to go to a mortgage broker, and the mortgage broker says, hey, Christine, you can afford a $3,000 a month mortgage payment, that might not really make sense if I have a lot of money going out into child care expenses.
Well, I'm so glad you brought that up because that's one of the things that I harp on all the time in my Right Fit mortgage process that I just recently received an international trademark on. I'm so excited about that. But in that whole concept, we talk about the fact that not every person's expenses are the same, and there's no way that a mortgage person can tell you what you can afford. They can only tell you what the lender's willing to lend, and that's just not the same thing.
I completely agree. And there's so many monthly expenses that don't go into your mortgage application or that really should be considered in your overall financial picture, such as your cell phone bill. That's, while it's not showing up as a debt on your credit, it's certainly something. I mean, if you have 3 kids and a husband and wife, you have 5 phone lines, that can be a $300 bill every single month. And I just think it's really important that people list out all of their outgoing expenses and not overextend themselves, especially with what we saw happen across the U.S., in the 2006 crash. So many people were over-leveraged.
Uh-huh.
And they went to go see a mortgage broker, and I think that mortgage broker said, hey, here's what you qualify for. Go ahead and get the max, because houses are going up anyways. And when houses didn't go up in value, as a matter of fact, they went down in value, what so many people realized is they couldn't afford their mortgage payment along with the other expenses that they have monthly.
Right. No, I agree completely. And then taking every dime that they've got to get into the home and not having an emergency fund. Because what happens is if there's something going on later, then out comes the plastic.
And I think that they say, you should have at least 3 to 6 months
mm-hmm.
of living expenses in your savings account, because we don't know. I mean, you can be driving to work and you get in a car accident, and then you're out of work for a month or 6 weeks and you have medical bills. You don't want to lose your home in that situation. You want to have a backup plan. And I think, what has really come out of this last financial crisis is so many folks really need to make sure they're not overextending themselves, make sure they're not using credit cards for their living expenses. And so in my opinion, all of your living expenses, including your mortgage payments, should be at or less than 50% of your income. Mm-hmm. That way you are able to save, and you do have extra funds for the things that that come up. I mean, there's holidays, there's birthday parties, there's so many things that we don't really consider, and that's why you need to have the extra money every single month to be prepared for that.
No, I agree. I'm glad you're on the same page. So having a great real estate experience is all about working with the right people. What kind of questions should a consumer ask when they're interviewing a real estate agent? And I I'm constantly telling people, quit calling on signs. So how do you feel about that?
Oh, I'm surprised at how many folks will literally drive around and call agents off each sign. It seems like buyers in that situation are doing so much work rather than having an agent work for them. And so in my industry, a seller pays the buyer's agent's fee. So it's free for a buyer to work with a good realtor who will go and hunt for homes on behalf of that buyer. If buyers are calling on signs, oftentimes those houses are already pending, or they might be overpriced, or who knows? And that buyer is only calling the listing agent. And, of course, that listing agent who wants to sell his listing is going to tell the buyer whatever that listing agent can say to try to sell the home. Mm-hmm. And so it's not to the buyer's benefit to call a listing agent off the sign. As a matter of fact, they're not getting representation, and it's free representation to the buyer because the seller pays the buyer's agent fee no matter what.
Right.
So I recommend every buyer have a designated agent working on their behalf. Now, what I would recommend any buyer when they are looking for a good buyer's agent is to have a conversation with that buyer's agent and ask them how many transactions do they close a year? Do they specialize in just working with buyers, or are they an agent that also takes listings as well? So on my team, I have 5 designated full-time buyer's agents. My buyer's agents have an assistant that helps with all their transactions, and all my buyer's agents do is specialize in working with buyers. Mm-hmm. So they are current on all the inventory in Central Oregon. They go look at every new house that hits the market. They are up to date and current on what's going on with financing. And their only role, their only job, is to work well with buyers. So they're obviously very, very experienced at what they do. They know the market, and they do a phenomenal job with buyers. Mm-hmm. And then an agent like me, and then I have 2 additional agents, we are listing specialists. So myself and my 2 listing specialists, all we do is work on behalf of sellers. We go out, we list homes, we spend all of our time marketing those homes, and we work specifically on helping folks that are looking to sell their home for the most money possible. So I rarely ever work with a buyer unless it's a close personal friend or, just kind of an unusual situation. For the most part, all I do is focus and specialize on the listing side of things. So when a buyer chooses to work with one of my buyer's agents, they don't have to worry about that buyer's agent also listing properties, also marketing properties, also being a transaction specialist. They know they've got somebody that specializes specifically in assisting buyers, and it's free to the buyers.
Right.
You don't have to pay for that fee, so why not get a specialist?
One of the things I've been hearing about a lot lately, too, and it's kind of along the same subject that we're talking about, is that I've pre-approved people, and they're out, doing their house shopping, and they're saying that they're constantly in a multi-offer situation, or every time they find a house they're interested in, they're gone before they can make an offer. So is there anything that they can do to help with that?
Yeah, that is such a frustrating situation, and we've seen more and more of that happen recently, especially with there being such a low amount of inventory in certain price points. Namely, right now, we have an extremely low amount of inventory in Bend under $250,000. So almost any halfway decent, nice home listed in the $250,000 or less price range ends up with multiple offers. So what I suggest to buyers, again, they need to have a buyer's specialist that's full-time working on their behalf. So when a home hits, that buyer's agent should be contacting the buyer within the hour to give them the information that a home has hit in their price range. My buyer's agents are trained to follow up with the buyer, ask if the buyer can get into the home, and if the buyer is not available because maybe they're working, my buyer's agents will go and preview the home on behalf of those buyers, do FaceTime videos, take videos, do extra pictures, or even call the buyer while they're at the house to walk through and describe the home. If it sounds like a home that is the perfect fit for the buyer, I suggest the buyer go ahead and get an offer submitted. And my buyer's agents are prepared to do that within an hour of the home hitting the market. So as long as it meets the criteria, a lot of times these homes, they are selling in less than 24 hours, and it's to the first person who gets that offer in. So, you know, if the buyer, if one of our buyers is in a price point that's a multiple offer situation, it's just a matter of being on it within the hour, getting the buyer in as soon as possible. If the buyer is working, getting the buyer's agent in as soon as possible to go through and describe the property in detail, get the offer written and submitted. And then, of course, in those situations, coming in with lowball offers and things like that, you know, a seller is not going to be motivated to take less than the list price for a home if it's just hit the market.
Right.
So we'll instruct our buyers, hey, in this price point, be prepared to come in at the seller's list price, or sometimes even, you know, $1,500 over list price gives our buyers an edge to win if it's a multiple bidding situation.
Well, that's good. That's good to know, because I think a lot of people are getting really frustrated because, especially like you said, in that lower price bracket, that everything is just being gobbled up so quickly that it can be crazy.
Well, and again, I mean, it's free for a buyer to have a buyer's specialist working on their behalf. If a buyer is waiting for something to hit Zillow or Trulia, or waiting to get notified on a listing and then drive by after work, oftentimes it's too late at that point. I mean, we're already lost out. So what they need is a full-time buyer specialist working on their behalf, getting them that information within the hour, and you know, aggressively being the first one in line.
Right. No, I agree completely. So we have like 2 minutes left, and I had one question that I really wanted to ask you before we go today, and that is, what do you think is the biggest misconception that potential buyers have about today's market?
I am so glad you asked that. The number one biggest misconception that I am seeing is buyers are still expecting to be able to go out and find discount properties via foreclosures and short sales. And they're just not there. I mean, we have very few short sales and foreclosures hitting the market. When we do see a short seller or foreclosure hitting the market, the banks want full retail value, and sometimes these banks want 10% over retail value on a home. So I guess, you know, it takes some time to just explain to buyers there isn't a bargain or a discount at this time in bank-owned or short sale properties, and they're very few and far between. We rarely see them listed. And then, you know, we have a lot of buyers that are hoping to buy a home at a steep discount for what homes are going for in a neighborhood. I think that sellers are extremely well informed because so much information is available online. Most sellers realtors and banks and just about everybody in this business, they're very aware of what homes they're selling for in a neighborhood. So when buyers come and they say, I just want a really good deal and I want to get something for $50,000 less than what homes they're selling for, or they're expecting maybe to get prices that we were seeing in 2010 and 2011, we have to let them know, boy, it is just not happening. Right. And just, we'll have buyers often say, oh, just send me the foreclosures and the short sales. And we'll be like, well, you're not going to see very many new properties hit the market. And by the way, you may be paying more for a short sale or foreclosure than what you could do just buying a traditional sale.
No, right. I agree completely. I haven't seen a short sale or a foreclosure come across my desk in months and months and months.
Yeah. I mean, they are few and far between, and they are no bargains. It's just not there. But I do see really wonderful properties come and go. They just go so fast. They hit the market, and sometimes within 4 hours, they're already pending.
Wow.
So it really comes down to a buyer having a fantastic agent that is on the ball, watching the market, and is getting them the information within an hour.
I just think it's incredible. It's a really interesting time, and even though I've been in the mortgage business for almost 40 years, I'm really enjoying this market because it's fast-paced and it's exciting.
It is exciting. I love it, and I believe everybody should, be able to have the American dream of owning at least their own primary residence.
No, I agree.
I think, being a renter long-term can be so frustrating. You don't know, if your rents are going to change from year to year. You don't know if your seller is going to decide to sell. When you own a home and you go ahead and fix that long-term interest rate, that place is yours. You don't have to worry about the inconsistencies. And I'm just a big believer that everybody should be able to own their own home.
Oh, I know. I agree completely. Well, listen, we are out of time. It has just flown by today. And
thank you.
I have thoroughly enjoyed having you as a guest. And we're going to have to do this real soon again because you've always got some great points to bring to the audience.
I would love to. Thank you so much, Karen.
As always, I want to thank my listeners for joining me today on Surviving the Credit Crisis. And I know in my heart that together we can all change our financial future one house at a time.
It makes you wanna sing. You live like a king with lots of money and fame. Ka-ching.